Should we buy or sell Alector Therapeutics? First off, read this disclaimer carefully. Here is their website. Alector breakthrough come from unexpected places. So their focus is on neurogenetic. Okay, I am now back. I had to take a call. So, devastating neurodegenerative diseases. Let's look at the pipeline because there are many types of neurodegenerative diseases. So these are tumors, Alzheimer's disease, orphan neuroindication, ALS. If you remember back, there was this thing called ALS challenge, the water bucket challenge. And what are these two? FTD. Yeah, frontotemporal dementia. Yeah, I think both. Yeah, both of yeah. So here are all of the Alzheimer's stocks. Alector is specialized on it, and also more broadly, as we saw, dementia. 28% from the 52-week low, but still 49% away from the highs. Here is the chart for Alector. Alec is the ticker. The reason why I find this one interesting is because of this chart pattern. It's called a rounding bottom. It is a clear sign that in this battle between the bulls and the bears, they had a bit of a standoff here late 2022, and it seems like the bulls are now gaining ground. So there's been a bit of a shift. So overall, it's bullish. Looking at the dailies, I don't like that the bulls lost the blue 100-day moving average, but there's been a very choppy relationship between the blue 100-day and the price for some time. As such, it doesn't have the same weight it would have if there were like tons of very recent interactions. Even back here, you see that there was some chop. But yeah, there are resistance levels above us. So we're not completely out of the woods. Looking at the RSI and the PPO, we are not at like extreme like buy levels. On the dailies as well, we are at a reduced level on RSI, but not a level where it's like a must buy. So if I go here to my notes, the key thing here is definitively rounding bottom. And I think I will give the bulls a 4 for the rounding bottom. The rounding bottom is a bit of a more obscure interest signal. That is why I reduce the score. But when a rounding bottom works, it usually works really well because the bears will have a very difficult time shorting a rounding bottom, simply because there's too much price action that shows a shift from bearish to bullish sentiment. So it's very unappealing to the bears. Similarly to how if you have a very rounding top pattern, it's difficult to become bullish. Let's look at the seasonality, and we do not get that much data here. We get the table view here to the right. February has so far been very flattish. March is a rather weak month. April, May as well, so the seasonality is not that helpful. But there is a caveat. We do not have that many years of data. As such, we shouldn't really exaggerate the importance of seasonality when there's limited data, but I will give this one to the bears with a 2. Next off is the fundamental picture. Looking in blue, price book, relatively low. Price to sales also low. Price earnings, well, it's at a reduced range. But you can see here with the price earnings data is that we did get some strange numbers, and that is very common for biotech stocks. The issue is that whether a drug becomes approved or not is going to have a huge effect on the valuation. So there is enormous opportunities in the biotech space, but also great ways to lose a lot of money fast because the moves can come very, very quickly. Yeah, but that makes it very difficult for those who are into fundamental analysis to really give a price because one approval or disapproval can have a huge effect. When we do look at the forecasts, there are 9 analysts with a 1-year price target, and given that the average price target is 128% above us, one could argue that a lot of pessimism is already priced into this stock. The analyst rating is a buy. So even though, yes, there is definitively a risk in a biotech stock, in this case, so much bad news and omens are priced into Alector that one could argue that there is value. In this case, I will give the bulls a 3. If this stock was in another sector, I would have given it maybe an 8 or a 9. It's just that this is very, very messy territory. Let's look at relative performance. These are weekly data points, and I am comparing Alector against the S&P 500, minus 7%. Negative correlation, that is. IBB, which is the biotech ETF, 46% positive. IBRN is the neurology, here is the ticker. So it is neuroscience and healthcare ETF, but basically, the brain and spine ETF. Let's look at the daily data points. We get 52% with S&P 500, minus 16% with IBB. Nothing even in this case with the dailies on the IBRN ETF. But I will have it here nonetheless, just such that you know that I did do a thorough analysis. In this case, it's a bit messy because on the weeklies it's IBB, on the dailies it's SPY. I think one could make a strong case that we will lean on the biotech ETF, the IBB. So what happens with the IBB is very likely going to affect Alector. Yeah, the green 50-week moving average is, yeah, it is pretty interesting because of the long-term history, even back here and here and here and here and currently. If we go here to the red color, you do see that it's also one of those levels you really do not want to lose. So it's a big deal. In this case, it's at support. Could be something here on the dailies. Oh, we have the red 200 daily moving average. So a lot of technical support here for IBB. Seasonality, yeah, I usually see more weakness into mid-March. February has been pretty weak so far. It's the second weakest month ever. Weakest February, that is. But March is pretty red though. Ever since 2014, March has been a very red month. That's not that that promising. Okay, so let's compare now Alector with IBB, like that. Weeklies. Okay, Alector is now getting rejected from this place where we did see a protracted period of Alector underperforming the IBB on the dailies. We got pretty high, and we are in the process of weakening versus the IBB. Seasonality here for March in this pair is not favorable for our Alec. Okay, that's an issue. I think I will give the bears -6 in this case. That was not ideal for the stock. We end up with -0.3 in favor of the bears. We are at the rounding bottom. However, um, it's messy because the technicals are bullish, fundamentals are also bullish, but the relative performance and seasonality data was not. In this case, we saw that the IBB, the biotech ETF, which is much broader than the stock, of course. The biotech space covers all kinds of medicines, so not exclusively neurological diseases, but a lot of the resources that go into the biotech space is definitively uh, in the neurology space. Another big part of biotech is, of course, genomics and also on oncology, cancer drugs and solutions. So yeah, a bit of a plot twist here. IBB is a lot more interesting than Alec. Yeah, let's look at the top components of the IBB ETF. We start with Gilead Sciences. Guild is the ticker. Oh, huge rally, but now we are pulling back. So if we were like here, it would be more interesting to be bearish, but in this case, it's messy because we did rally for a reason. Basically, this is not favorable really for bullish or really bearish trades because the good bearish trade is to short around here because then you have profits and the hedge. If you were to short as we lose the blue 100-day moving average, it's can be very frustrating because if you go back here, if you did that, you lose the 100-day moving average and then you go short. In this case, it would take you 7 days until you got clear profits, and even after that, here 9 days later, you would most likely be very disturbed by this candlestick here on the 28th of January, if you are short. So yeah, it's I prefer to get into both bullish and also bearish trades early. Regeneron Therapeutics, no pharmaceuticals they call it. Given that the name is Regeneron, like Regeneron Therapeutics sounds better than pharmaceuticals, but yeah. Yeah, so it's bullish, but it's already been on a big rally. Let's look here at seasonality bearish to the left, very flat for February. March could actually be a bit bullish. We are, elevated on price book and also price to sales. You have to go back here to 2021 actually to see these elevated price to sales levels. Also, price earnings seeing a bit of a increase. Let's look at the forecasts. Yeah, average price target is 11% above us, but minimum is 20% below. Max is 33% above. Yeah. So in this case, Regeneron, it's an interesting stock, but whenever I put on a position, I do want a more substantial edge. I want like multiple reasons to be either bullish or bearish. When it's a noisy trade, when you are like buying a stock after it's seen a big rally, sure it could go higher. It's just that you did miss out on a pretty substantial bullish move. So from the get-go, the split second you buy a stock that's already been on a tear, you have made a bit of timing mistake. So you start off in a bad way. And I don't like to start a position off in a bad way. I would rather um, buy a stock as it's beginning to make a more bullish move. Because Even if it's just a bounce, you can be a part of that bounce and profit. If it is a rally, well, it's even better. If it's a medium term or even long term gain move in development, that is, of course, even better. So you have more opportunities to be right. Same thing with shorting. If you short a stock that is very overbought, you can make money if there's a long term, medium, and short term pullback. In addition, you can also make money if it's like a very short term pullback, like those pullbacks that happen even in an uptrend. So basically, you have more opportunities to be right. If you instead short a stock as it is losing a long term support level and it's already down a lot, then you have far fewer opportunities to then be right. You can only then be right as a bear if there is a substantial downside that is like big time. So you put yourself in a more vulnerable, lower probability situation than if you began to try to short it when it was like very overbought and you shorted like a key RSI level as an example where it usually pulls back. But yeah, so that's the thing. Whenever you are investing, try to find higher probability events because then you are in a good position, even if you are wrong. But if you are betting on low probability events, then the numbers are just not there for you. The probabilities are not good. So always think about those kinds of things. The best trades you can make are those trades where even if you are wrong, you can end up with a profit. That's one of the reasons why the option market is very appealing because then you do have a lot of fancy stuff that you can do.